All right, so let's rip into it. First one I wanted to look at today, if you guys can see it up on the chart, Camber Energy CEI. Look at this volatility. I mean, come on, this is just madness. This is ludicrous. This doesn't make any sense. Look at these moves, okay? $1.10 to $3. 28 cents in a matter of like weeks. $5.
Holy moly.
It has become a social media phenomenon that trades totally devoid of any type of fundamental. It just trades on momentum and madness. So we've played this one a lot. We've made a good bit of money here. This one is a very fruitful stock to trade if you trade it right, because again, volatility is your friend should you trade it right. So this is the last move, right? It broke through any and all descending resistances. This is a fib fan. You use that to kind of identify different mean support and resistance levels. And remember, this is just where buyers and sellers meet. This is all math. We had a couple of big moves. If you go back to September, okay, we're talking these are like 100% plus moves up and down, okay? You don't want to be on the buying end over here thinking, oh, it's going to hold this descending support up here, and then boom, you're down from, you bought at $3.30 and you sold it at $1. That's not good. You don't want to do that. And then continual drip down until it found an absolute bottom around 45 cents, which in all honesty, I think it was attractive buy down there. But remember, when you get below $1, you run the risk of getting caught up in a reverse split, which means that they take the shares and they have to mash them all together. Today, we saw a push up to roughly $1.05 or so. This little gap right here was filled. That's mostly what the focus I want to be today. So we had like a big decrease in price action. So we covered the same range as March 8th on the 9th, all the way to the bottom of that range. Thought we had support. Just kidding. No, that's a fake out. This inverted hammer on the way upper in consolidation isn't often a very favorable sign. It means that buyers were strong enough to just barely keep the lights on, but the sellers ended up winning out, and then they did here, and buyers came back a little bit. Sellers and buyers started to neutralize here, and then buyers are starting to gain back strength with this tighter price action on the upswing. So we want to look at stuff like this, these little gaps right here, okay? So meaning it closed here, but then it opened down here. So if it closed at $1.23, but then opened at $1.05, what happened in pre-market? We held this support right here, okay? Good, that's favorable, we like that. Up against these descending resistances, okay, that held here, test, and then it broke. And the buyers filled the gap right here. This was a gap that was filled, so look at that. Here was the gap, so it closed here at $1.06, and then it opened at 99 cents. Then you look here, we see that we very precisely push this back up, so this would have been like a great trade right around here up to what, $1.05 or so. This empty price data right here, we filled it in, and what did it show us? That buyers didn't have enough to make it move, but sellers didn't have enough to shove it down. Do I have any beverages here? One moment. Hold please. Mr. GameStop-athin. This is one hell of a chart. Okay, so recent news, if you saw the TikTok, let's just take a little trip down memory lane. We alerted this back around $6-7. It went to just about 500. It was absolutely fantastic. The founder of Chewy gets involved, right? Wants to turn it into an e-commerce brand, which could be genius. GameStop is loved by many. If you're a millennial especially, you've been there at some point in your life, especially during your childhood. That was a high point. Whenever you got to go to GameStop, get a game or whatever, it was a privilege. So I think the psychology is there. We're seeing an influx of volume here, which is important. As you can see, like today was a big day. And what we know now is that like we have a little bit of a top of range here at 249. Like other than that, we have a pretty big window here of where the price can move. Now, what I would do personally is I would look at like this past range right here, okay? 126 to 180. It just bounced in this range for quite a while and consolidated, right? Even right here, we can still look at it as a similar range. So for 3 months, it traded in this tight range, which is important because what that tells us is that this price range is a real battle zone. Oh my God, it goes even further. When we have a really tight coiling price action like this, we know that a big move's coming. We don't know which way, we just know it's coming. And I think there's been enough consolidation here to say that a move could be imminent. Now then you gotta look at like the fundamental valuation of the stock and like, is it worth that amount of money? And kind of like, what am I really doing here? That's a good life question of like, does this make any sense? What we're wondering here is, since this was a very influential and important point, is the price gonna come back up and hit this point? And I think the answer is probably probably at this moment, yes. Now, tomorrow, the next day, don't know. Doesn't matter. But will it hit that point? Yes. It gives us a lot of power in decision making. Last but not least, AMC, which is going to probably follow GameStop. I like GameStop a hell of a lot more than AMC. GameStop has potential, in my opinion, as a business. So this is an interesting point, I think, right here. I think $30 is a price point to watch with AMC. We're going back in time, right? Imagine this didn't happen yet. Let's get that out of screen. And we go back and we say, you know what? We want to identify these ranges. We found a critical support around 15 bucks. Test, 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 test. Fail, but still a test. Test, test. See how it interacts with this line? That's what you're looking at. Is imagine like there's a handshake every time. 1, 2, 3, 4, 5, 6. It's an important price point, meaning buyers and sellers. That's the pivot point where it either goes up or down. Say we're back in like November, okay? We're back in time. And when you see it break above this $15 mark, we could take that trade and say, you know what? This is gonna be my support. I'm gonna set my stop loss close to here because I know if it goes below this line, it could keep going down. And then it keeps going down, right? So hopefully you've sold. That's why we took some profit at 14 bucks because I had already identified this range. I knew it's not that I predicted the future. I just used the past to draw a conclusion of what might happen. And most of the time, if you draw these appropriately and you understand the ranges, it's going to do the same thing. The same people that were fighting here are going to be fighting here. Market cycles. We identified that line. We were ready to go. We had our money ready that when this hit that $14, $15 mark, we were ready to buy. And if you did, boom, 20% right there. And if it keeps going, perfect entry. Keep an eye on that. Mind your P's and Q's, man. Trade well, trade safe. I love y'all.